Here's the thing. If you are filing your taxes and you did not check for these 3 credits, there is a very good chance you are leaving thousands of dollars with the IRS. Money they literally set aside for people exactly like you. The IRS estimated in 2021 that only 7% of eligible taxpayers claimed the Saver's Credit. The average credit claimed was just $191, which tells you most people who claim it do not even realize how much they could be getting. Let me explain the difference between a credit and a deduction, because this is where most people get confused. A deduction reduces your taxable income. If you are in the 22% bracket and you get a $1,000 deduction, you save $220 on your taxes. A credit reduces your actual tax bill dollar for dollar. A $1,000 credit saves you $1,000. Credits are dramatically more powerful than deductions, and most people spend way more time chasing deductions. So, let me walk you through the 3 credits that almost nobody claims in full. And the first one is the Saver's Credit. If you contribute to a 401k or an ABLE account and your adjusted gross income is below $80,500 for married couples, filing jointly in 2026, you may qualify for a credit of 10, 20, or 50% on up to $4,000 in combined contributions for a couple. At the 50% rate, which applies below $48,500 AGI for joint filers, a couple contributing $4,000 to their IRAs gets a $2,000 credit back from the government. That is not a deduction. That is $2,000 actual dollars off your tax bill. And if you are single with income below $24,250, the same 50% rate applies on up to $2,000 of contributions for a $1,000 credit. Now here is the second credit that a lot of early retirees completely overlook. The premium tax credit for health insurance purchased through the Affordable Care Act marketplace. Here's the thing. If you retire before 65, which is when Medicare kicks in, and your income is between 100 and 400% of the federal poverty level, you may qualify for a subsidy that dramatically reduces your monthly health insurance premium. For 2026, the subsidy structure has been enhanced so that nobody pays more than 5% of their household income for the benchmark silver plan. And if your income is low enough, your premiums could be nearly fully covered. This is critically important for early retirees because health insurance is typically the single biggest expense between retirement and Medicare eligibility. The premium tax credit can save a couple $10,000 to $20,000 a year on premiums alone. The third credit is the Earned Income Tax Credit, and a lot of people assume this is only for families with children. For 2026, a single person aged 25 to 64 with no children can qualify for the EITC if their earned income is below roughly $19,000. The maximum credit is about $632. With one child, the income limit jumps to around $50,000, and the maximum credit is roughly $4,200. With two children, it goes up to about $56,000 of income and a maximum credit over $6,900. And with 3 or more children, the income limit is around $60,000. With a maximum credit of nearly $7,800. If you are an early retiree working part-time and you have modest income from a job, you may qualify for this credit, even if you have substantial savings. Here is the key thing to understand about all 3 of these credits. That means, even if you owe 0 in taxes, you can still receive the credit as a refund check from the government. It is literally free money that you are entitled to. Now let me show you how these stack in a real scenario. Imagine a married couple in their early 60s who have retired early. One spouse works part-time, earning $25,000 a year. They contribute $4,000 to their IRAs. They qualify for the Savers credit at the 20% rate because their AGI is around $21,000 after the IRA deduction. They qualify for the premium tax credit, which covers most of their health insurance premium. And they qualify for the earned income tax credit of roughly $3,000. Combined, that is nearly $4,000 in refundable credits and thousands more in health insurance savings. Go to irs.gov and look up Form 8880 for the Savers credit, Form 8962 for the premium tax credit, and the